Welcome to Guide to the Global Economy. I'm Josh Lipsky, Director of the Atlantic Council's GeoEconomics Center, and today we are going to take you inside our thinking about the most pressing issues in the global economy that we think others are missing. We look at the intersection of foreign policy, finance, and economics, and explore a range of topics facing advanced economies, emerging markets, and the developing world. And I want to start today with Mugrank Busari, Assistant Director at the GeoEconomics Center. Gank, this week we picked the issue that's front and center of everyone's mind in Washington, the debt limit, but we tried to do something a little different at the GeoEconomics Center, not just look at how Washington's thinking about the debt limit, but how other countries handle their debt limits.
Yeah. So Josh, this week we wanted to look at how countries around the world are looking at debt limits and if they have a limit at all and how they approach the question. And so this week we divided all countries into three groups. One, the first grouping being no debt limit at all. The second grouping being debt limit as a percentage of GDP. So the actual value varies year to year. And the third grouping was debt limit as an absolute total value. And the most striking finding of this research for me was just how rare debt limits are in national finance.
Well, it might surprise folks. You know, we think from a Washington American perspective, oh, we have a debt limit, everyone must have a debt limit, but that's not actually the case. Let's look at the chart. So walk us through what we did here.
Yeah, so in green, you see the countries. These are mostly G20 countries that do not have any sort of debt limit at all. And in the blue are the countries where debt limit is as a percentage of GDP. And debt limit in the red is the debt limit as a fixed value. And really, what is most...
fixed value, describe to everyone what we mean by that.
So it's a set value that you can't, no matter what the value of your currency is, you can't cross this debt limit of this value, X value. And as per our research, there's really about 10 entities in the world, 10 polities in the world that have any sort of debt limit. And even within those 10 countries, the debt limit laws are either suspended in times of economic upheaval, like a pandemic and like a war, or the debt limits have no punishment. So countries think of them as a suggestion and they just go beyond the debt limit when they feel like it.
So we are really the exception here.
Yeah.
It's us and Denmark, essentially. But you showed in the research that even in Denmark, that has the numerical fixed value like we do, it's not a political fight like it is here.
So it isn't. So in Denmark, the debt limit laws came in the 1990s. And the very explicit intention of the parliament then was to make the debt limit nothing more than a formality. And so the debt limit is set so high that it will never be crossed. In fact, even right now, the latest increase in the debt limit was in 2010, and even today, the actual debt limit stands at about a third of the total debt limit that can be reached. So it's nowhere close to being reached.
And it's important to point out that the U.S. has one of the highest debt to GDP ratios in the world. So it's not to say that a debt limit works. These countries, some have very high debt to GDP, but some don't. So there's a range of outcomes, and it sort of implies that a debt limit doesn't really make a difference to your country's debt to GDP.
And in the US, it initially came around World War I when the Treasury really needed debt to fund the World War I, which was really a whole of economy endeavor. But since then, it's really taken on this. It's taken a life of its own, debt limit negotiations, and it's really not as much about fiscal policy as it is about political negotiations and politicking.
So are there any other countries in your research that mirror the US political situation around debt limit anywhere in the world?
There's very few countries where debt limits create a political impasse. But in Kenya, Kenya was the one country where we did observe some political back and forth in terms of how do we deal with the debt limit. And in Kenya, what happened, the way they dealt with it for temporarily is that they used to have a debt as percentage of GDP debt limit. But now they've temporarily converted into as an absolute value of 10 trillion shillings. This is supposed to be an interim measure so that when the new government comes in, they will be going back to a debt limit as a percentage of GDP. But it hasn't happened yet. The new government has come in, it hasn't happened. And there's still a lot of lack of clarity about what is going to happen with the debt limit. But like again, when there is an issue, they figured out ways to just bypass it and not make it a big issue where the government has to default on its debts.
Well, that sounds a very sensible way to approach it. We hope cooler heads prevail here in Washington. Gank, thank you for doing this research.
Thank you.
We're now going to start with our Under the Radar section of Guide to the Global Economy. This is where we look at one country, something that's happening in their financial system, monetary policy, their economic system, and that we think matters for the global economy, but others might be missing. And I want to welcome in Alicia Changani, Project Assistant with the GeoEconomics Center. Alicia, welcome.
Thanks for having me.
So we decided to look at Bank of Japan this week.
Yeah, so after Davos, the central bank governor Haruko Kuroda kind of defended his monetary policy easing and his ultra low interest rates. So decided to see what was going on in Japan.
And he's been sort of a legendary figure,
Yeah.
Kuroda. He's coming at the end of this tenure and an important figure in monetary policy.
So he served as central bank governor for 8 years, which is the longest any central bank governor has served in Japan. And so his term ends April 8th, which means that the next nominee should be out early February, as early as February 10th.
Oh, so this is any day now.
Yeah.
So who are the front runners?
Yeah, so the front runner right now is the current deputy governor.
Makes sense.
Right.
Deputy governor next in line.
And Amamiya, he has been nicknamed Mr. BOJ.
Yeah.
And BOJ stands for Bank of Japan. And you may wonder why that nickname even exists. Well, it's actually because he's just been the brain behind a lot of the monetary policy easing ideas we saw in Kuroda's term.
Wait, let me just pause there for a second. So he's been the brain behind the monetary policy easing. This monetary policy, yield curve control, as it's called, and a bunch of other quantitative easing measures, has been highly controversial. The bank has to unwind that now. So why would the architect of that policy be the right fit to do the unwinding?
I mean, I think you're asking the right questions. Personally, I also think that he might be the best, right? If he made it, he might know how to unwind it.
So who are the other contenders?
Yeah, Nakasao, he was the former deputy governor, and he's nicknamed Mr. Exit.
Well, what is Mr. Exit? Why does he get that nickname?
So Mr. Exit, because he's lovingly given that name, because he kind of, navigated the exit in the 2006 monetary policy easing that we saw. Yeah.
So you have one candidate, the deputy governor, who's the architect of the controversial monetary policy that has to be undone.
Yes.
And then you have another candidate who previously, in another era, did unwinding of complicated and controversial monetary policy. So kind of two very different routes to take.
Exactly, and it's very two interesting candidates. And I think it just begs the question of whether, Mr. BOJ can unwind his own creativity. If he can, what's that going to look like? And if Mr. Exit Nakasao can live up to his title of being exiting out of this.
Our selection process in the US is never quite as dramatic as this. So we will be paying careful attention this week. We look forward to the nomination. And Alicia, thanks so much for looking into it.
Thanks for having me.
Well, it's now time for By the Numbers. This is where we pick one number, one chart that we think really jumps out this week to us that others are missing in the global economy. And I'm very excited to welcome in Sophia Bush, Managing Director of The Guide. Sophia, welcome.
Thanks.
So what was the number? What did we decide to focus on this week?
Right, so our number is 6.34.
Okay.
That's the number of percentage points that Brazil's total consumer price index has dropped in the last 6 months.
All right, let's take a look. Okay, so here we have CPI, Consumer Price Index, from a range of economies. We spent a lot of time this week. The Fed met this week. The ECB met this morning. The Bank of England is meeting today. So a lot of time thinking about the advanced economies and how they're dealing with inflation. And we thought it might make sense to look at some emerging markets.
Right, so the important thing to remember is that now this is a global phenomenon. This isn't isolated to the US or the Eurozone. This is everywhere. But what we're seeing, as you can see in this chart, looking at China, Brazil, India, Chile, and Poland with,
almost every region of the world represented there.
Yeah, exactly. Is a lot of emerging markets are seeing inflation either decreasing or stabilizing.
So that's positive news. It may not be dropping precipitously, although Brazil's, and I guess this is why we chose that number, that really did sort of fall off a cliff.
Yeah.
So,
Absolutely.
so Brazil's is coming down, others are stabilizing. And I guess the question is, because this happened with the Fed meeting this week, is do you think that trend is going to continue, or have we reached peak inflation, or do we dare say, is this going to go back up? That's a difficult question to ask.
Yeah, it's a $1 million question, so thanks. But no, I think, what we've heard from the Fed and the ECB is that they do continue to expect to be hiking. But I think, the importance with monetary policy is that there is a lag. So, the hawkish decisions that we saw a couple months ago are getting priced in now. So
that's a really important point, because what's being reflected here is the rate tightening in these economies, and they did different cycles and different processes, really, towards the second half of the year, because this just goes to January, there's been a lot of hawkish monetary policy since. So that could, continue to have an impact here.
Right. And I think, we'll be keeping our eye on wage pressures and other, shocks that could have an effect. But,
So what's interesting to me as we look at this chart is that inflation, kind of was low. If this was the period of low inflation, and if you looked at the US and Europe, it would actually be similarly low. So we had this global sort of disinflation environment. And now we had this global inflationary environment. And I guess the big question is the world going to move as one going forward? Or do things start fracturing again?
Right. I don't really know the answer to that,
Yeah.
but I think as we are looking to a potential, a global deflation, we'll have our eye on upcoming central bank meetings, and we'll be looking at the data.
And I'm glad you said upcoming central bank meetings, because this is our interactive central bank global economics center. Just tell folks what they can do here.
Right. So this is our global economic events calendar. And what we have is upcoming data releases and central bank decisions, but we've also included the data behind it in each of these events. So as you're exploring what's coming up, you can learn a little bit beforehand.
So this came out of our shared frustration as a team of saying, when is that bank meeting? And why can't I look at this in one place? And so we put it all in one place. This goes months in advance, and it's real-time data. That's what's so exciting. So you're getting the most current information.
Yeah, exactly.
Sophia, thanks for all you do managing the guide process, and thanks so much for being with us today. And thanks everyone for joining us for our second edition of Guide to the Global Economy. We are going to continue doing this, take you inside the thinking of our center and the issues that are being missed in the global economy that we think are extraordinarily important. We hope you join us.